your commodities time now, and just as I said before the break, let's maybe we can find out where the president is expecting this $10 billion from to clear the backlog of FX shortage in the country. To join for this conversation is Oluwatomi Mayowa, analyst with Financial Derivatives Company, joins us virtually. Hi, Oluwatomi, good morning. Looking bright in your yellow.
Good morning, Ini. Thank you very much for having me.
Great. So we're trying to understand where this $10 billion will come from. You have your ears close to ground right there at FDC. Perhaps you've heard something and would like to share.
Well, let me first of all say that it's actually crunch time for Nigeria. Nigeria is currently facing a myriad of problems, and no solution actually comes easy, right? Actually, the president has said that they're going to source for about $10 billion from anonymous sources. And basically, they're going to issue domestic debt instruments in foreign currency. So it's to clear to clear the backlogs. And I would like to first of all put it in a particular perspective or talk about the implication of what this is. First of all, one must know that this $10 billion that is going to be sourced from anonymous sources is not tied to projects that would actually boost productivity. Instead, it's going to be used for backlogs. In other words, it's going to be used to settle what has already been consumed. It's going to be used to settle commodities that have already been consumed. And looking at the implication on Nigeria's debt, our external debt, first of all, is going to increase our external debt. And when you also look further into the debt service cost, because we are actually in a high interest rate environment globally, because the US has increased interest rates, and so that is actually going to increase the debt service cost. The amount that we paid on the debts. So basically, it's going to worsen the Nigeria's fiscal pressure. And also if you look at our forward obligations in terms of crude payments, most of our crude is actually in swap. And so, looking at the ability for Nigeria to pay because of the declining revenue, it's going to be a little bit difficult, because our crude is already in, at least most of them are already in swap. So, looking at the payments of the debt, it's going to be a little bit complicated. And then moving further into concerns about our net external reserves, because if we have about 33 billion, which is being reported by the CBN, there will not be any need to say you want to source for about $10 billion, from anonymous source, because it wasn't really mentioned. But all we know is that it's going to be a debt instrument that will be issued to domestic people, issued in foreign currency to people in Nigeria, to Nigerians, basically. So if we have about 33 billion, then why do we want to go ahead to, borrow 10 billion from Nigerians, $10 billion from Nigerians? So it just raises concerns about what our net reserve is. So the federal government, we need to come clean as to what our net reserve is, what our current position is, so that this would actually help us see a clearer picture of what policies that will be taken in the future. So basically, it's a difficult situation. It's complicated. But looking at it on the impact of Naira, first of all, I would say that there's a lag between policy announcements, the impact, and then what the people believe. In terms of the policy announcement, we've seen more announcement than what is being done. Definitely the Naira is because we are told that it's going to be coming in about 3 weeks or 4 weeks thereabouts. So Nigerians will want to wait for what the impact will be on the foreign exchange market before they begin to see what's going to before they begin to believe on what the Nigerian president has said. So basically, before we would usually see immediately an announcement come in like that, we'll see reactions from the market. But instead, we saw the other way around. In fact, Naira even depreciated further in the parallel market to about 1,250 from about 1,170 last year per dollar. I mean, last week, Friday. So we've seen that gap between what the announcement and what the people believe. So until we see the impact of this, of the inflow of dollars, then that's when Nigerians will begin to, the speculators begin to, bring out their dollars, basically. So we're going to still see that gap in terms of the impact of the dollar.
Yeah,
On Naira.
I mean, and you don't blame Nigerians because the unification announcement was made months ago, and instead we have seen the gap grow. Now, there's been some suggestions on how this can be solved, which is for the federal government or the CBN to enlarge its net and accommodate some informal sources. I know the BDCs have said one, and thank God the 43 items were one way or the other, so at least dealers in that do not have to go back to the parallel market. But what about the suggestion of the CBN, for instance, accommodating the BDCs and other informal sources of FX into the formal sector? Because it seems there's a whole lot outside the CBN vault than what you have inside.
Yeah, I would say, first of all, I agree with you. But we must understand that the restrictions, the arrest of the BDCs that we had, the restrictions, further, worsen the problem in the Forex market, because it complicates the issue, right? So the structure of Nigeria's Forex market really needs to be changed. In terms of transparency, there needs to be increased transparency in the Forex market. There needs to be price discovery. That would actually bring out. So the Forex market is just like any other commodity market, outside there, whereby there's transparency, there's, perfect information. Although we know that perfect market is sort of what is in the mind. It's not, we cannot totally have a perfect market, but the shift of the Forex market from an imperfect market to a perfect market, the Forex market must shift closer to a perfect market, whereby there is perfect information. Everybody knows what the price is. There's no some form of disclosure, some form of hidden information about the price. So there needs to be perfect information. There needs to be transparency as regards to what the price is, and there needs to be supply. There needs to be supply so that they can be, because in the perfect market, the assumption is that there are many buyers and there are many sellers, right? So including the ones you said about the aboki and all of those things coming into play, we would see the Forex market moving closer to a perfect market, and this would actually help the Forex market improve even in the future.
This is commodities segment. How does all this affect the commodities prices?
Well, it's really been a serious one, because we've seen a transmission effect, which is almost immediate to domestic prices. For example, we saw a spike in flour, a bag of flour, to about 45,000. It used to be 30,000 some months ago. Now it's about 45,000 naira. You're looking at beans, the price of beans has also increased. So basically, we are looking at because the food basket has some import content, so which we know that wheat is used to make flour. So basically, when this wheat is being imported, we must know that the price of wheat globally has actually declined. But because of the exchange rate, the depreciation, that's actually canceling out, or should I say, reducing the effect of the reduction in global price on domestic prices. So we're seeing exchange rate depreciation, the transmission effect on food prices. And that's also making food prices expensive. And we're also seeing demand increase for substitutes. And because the demand for substitute increases, it also pushes up the prices of those substitutes. So basically, we are seeing prices increase throughout, the food basket. And also, don't forget that the food is being transported from the farm then to the market, and the cost of that transport has actually increased. Looking at diesel price, rose to about 1,030 Naira before, declining marginally to about 950. So 990. So basically, it's the cost of transportation has actually increased. So transporting those goods from the farm gate to the market prices, is also filtering into the price of those commodities in the market. So basically, that's what we're seeing in the market.
All right, thank you so much. Not a good picture, but it's also important to say that it's not just
I would
Nigeria.
like to also add that because we're seeing some action from the government in terms of palliative, and the 5 billion has been added, and they're promising a minimum wage review, which might most likely happen next year. That might provide some form of comfort to Nigerians, because once we see an increase in the money that's being earned, that would actually help some low income earners to be able to purchase those commodities. So I believe that is some form of comfort in the short term.
All right, but I mean, we've also seen the money in circulation also increase, and that's threats to further inflation. So I mean, it's a difficult thing to find a balance. But I mean, we'll just deal with it one at a time. But thank you so much for your time and sharing the perspective of FDC. Oluwatomi Mayowa, analyst with Financial Derivatives Company.
Thank you very much for having me.
All right, now, well, the picture is not very glossy anywhere, not in the UK, not in the US. Even though the US is controlling the world, the dollar gains, and then, then debt servicing increases, and